Without a merchant account, you're leaving money on the table, money that would look so much better in your bank account. Today, I'll walk you through what a merchant account is, how it works, and most importantly, how to get one for your business. Let's get into it. So what is a merchant account? Think of it as a specialty bank account that allows you, the business owner, to accept credit card transactions. Essentially, a merchant account acts as the bridge between your customer's bank account and your business's bank account, supporting the secure transaction of funds. Its main job is to temporarily hold funds to allow time for refunds, chargebacks, gratuity, and other back-end transactions to settle before transferring to your business bank account. Now let's break down how a merchant account works. The primary function of a merchant account is to guarantee the secure and reliable transfer of funds to your business account. When a customer uses their credit card at your business, the money doesn't just show up in your account, even though sometimes it can feel like your money just magically appears. Really, there's a whole lot happening behind the scenes that you don't see. Let's take a look at each step of the process. First, you accept a credit card payment from your customer. Then, your payment processor forwards the transaction details to the customer's card issuing bank for authorization. At that point, it's either approved or declined. If it's approved, the transaction details are sent from your payment processor, which then facilitates the movement of funds from your customer's bank account to your merchant account. And finally, within 24 to 72 hours, the funds released from your merchant account into your business bank account. It's like magic. By getting a merchant account, your business can unlock, countless benefits. Let's go through them. So first up is convenient payment options. Merchant accounts support a variety of modern payment methods such as credit cards, debit cards, digital wallets, and online payments. And by offering these options, you'll tap into a wider customer base. You can also support more sales. Not only does a merchant account allow you to accept the most commonly used payment method, but did you know that customers also spend more per transaction when paying with a card instead of cash? That's the money on the table I was talking about earlier. So fortunately, with a merchant account, you'll have the proper security features in place to support higher transaction volumes. Speaking of security features, you'll also have access to advanced security systems. Merchant accounts come with fraud detection tools to protect both you and your customers from things like chargebacks and friendly fraud. When these issues happen, it can be detrimental to your business if you don't have a solid security system in place. Next up is integration compatibility. Securing a merchant account also means that you'll have access to the most advanced payment gateways, virtual terminals, and point-of-sale systems in the market. Using a payment gateway could give you access to recurring billing options and also integrate with software to streamline your entire payment experience. Finally, you'll have access to business funding. Lenders often consider merchant account activity as an indicator of your business's financial stability. So if you have a merchant account, you'll have official proof of your business's revenue, which makes it a lot easier to get funding from other financial institutions. Comparing merchant account fees is like comparing apples to oranges. It's difficult to do because costs are different for every business. Factors such as your monthly processing volume, how you're accepting payments, and pricing structure all affect your fees. For example, card-present transactions are less expensive than card-not-present transactions. This is because there is less risk of fraud involved when you swipe a card in person, rather than taking a payment through a virtual terminal or online. If you want to learn more about merchant account fees, I'll leave the link below. So with all this talk about merchant accounts, it's finally time to go over how to get one. For the most part, the process is generally the same for every business. First, you'll fill out a pre-qualification form that includes your business and personal information. Then you'll be contacted by a representative to talk about your specific business needs. After that, you'll complete an application and collect all of your required documents. Finally, your information is sent to the underwriting team at the processing bank, where they determine whether they'll approve or decline your application. But what happens if you don't get approved? Well, if you're denied a traditional merchant account, you can apply for a high-risk merchant account. High-risk merchant accounts offer all the same benefits, but they're specifically designed for businesses that cannot get approval for a traditional merchant account. So if you already have a business and are looking for a better solution, or you're a startup wanting to accept credit card payments, reach out to see how we can help you get started with a merchant account. So thanks for tuning in, and until next time, happy processing.